Welcome back to Legalese 123, where we are covering cases across America. Hello and welcome back to Legalese 123. I'm your host, Missy K. I hope you are doing well on this Wednesday, the 4th of March. Again, today is the official day that, unfortunately, Eric Richins has passed. We're going to take a moment of silence for him. Kouri Richins, case day 7. We're still at the end of the cross-examination of the forensic accountant. The defense gets their chance. That happened yesterday, but I am covering it right now because one can only cover so much. Kouri Richins is being accused of allegedly unaliving her husband, Eric Richins, with a fentanyl overdose. Many people have testified thus far. The person, her housekeeper, Carmen Lauber, testified that she was the one that was requested by Kouri Richins to purchase some opioids for herself. Eric Richins was allegedly poisoned on February 14th with a breakfast sandwich. And then now on March the 3rd, the eve of March the 3rd, potentially given something in a drink that was provided to him from her. And then he went to bed. She woke up at 3 a.m., checked on him. He had passed. The trial is about whether or not she did this, obviously, and what potentially and or why did she do it. We do know that she had a boyfriend, Josh Grossman. We do know that yesterday we saw all of the forensic evidence. Well, we saw an accounting of her finances. Remember, she was a house flipper, so she would buy a house. She initially got underwater when she got a HELOC loan on their current house that Eric and her owned. Well, I mean, he owned the house. The deed was in his name. She did not have rights to it. Did she sign his name to the HELOC loan? It says under attorney. Did she do it? Did he know about it? Eventually, he found out about it. Yes, because you cannot hide that. And then they had problems in their marriage. This was given testimony by his sister, Katie. And then they had gone to counseling. She never paid back the $250,000 that she took out for that loan. She paid some of it. She didn't end up paying any of it. And then she just continued to buy houses. And then she manipulated her bank documents to make it look like she had money in it by taking the top off and putting Eric's business information in there to look like she had money in her accounts. They questioned her about it, but she just fluffed it off. And for some dumb reason, the banks and whoever else she was getting money from said, sure. Then she couldn't pay those off. So then she started getting payday loans. And if you know anything about a payday loan, you know that they are like a quick and fast way, and the interest rates are extremely high, and you have to pay weekly or monthly or daily to pay that back. And she just kept taking a payday loan and payday loan and payday. And those things, if you don't have the cash to pay them off, the interest rates alone are going to kill you. And if you don't think that's enough, if you don't think that that's enough with all of the houses she still currently has that she's not flipping, she's not gaining money from, she went and bought a $2.9 million mansion that had multitude of problems. It was on a wetland. In the documents that she signed, she knew the issues it had. First of all, it was open, so critters were getting in. So anything that they had done prior would have to be redone. So all of the ventilation systems may have needed to be redone. There was vandalisms and squatters in there, so that may have needed to be redone. It was on a wetland, which was not protected. The Army Corps of Engineers was having an issue with them. So they had to halt the construction of this mansion because they didn't have the proper permits to continue. Also, the Army Corps of Engineers, which is it's an entity of the government, said, you can't do anything on here until we figure out what to do with this wetland. She's like, no problem. Hold my Moscow mule, if you know what that means. I'll go ahead and take on this project, or whatever she planned on doing. We do know that after she purchased it, she wanted to try to sell it. Perhaps there were several different buyers. Perhaps she didn't get the right money for it. Who knows? Who knows what's in this girl's head? So, in the end, we found out that she did receive money from Eric Richins' death from the life insurance. A total of approximately $1.3 million she received in his life insurance. What did she do with that money? Smartly, she paid down some of the loan, but she gave $25,000 of that to her boyfriend, Josh Grossman. I kid you not. And then on top of that, she still was in debt. The Midway Mansion foreclosed. The property, the 299 Barnaby is what they're calling it. That property was foreclosed as well. And sadly, Chelsea Barnaby, who is Kouri Richins' friend, had paid her $45,000 for a down payment on that home. Kouri basically said that she was going to be sort of the owner of the house, and that somehow or another, with financing and stuff, they could figure it out, and that she would be the landlord. It didn't happen. She took that $45,000 and paid off some of her payday loans. Didn't use it towards the house at all. So here we are. We are in the cross-examination of the defense. So let's get into it and see what and how transpired, and if we learn anything else from this.
Thank you, ma'am. I think that's all I have for now. I suspect we're going to take a break, and the defense will have some questions for you.
Okay.
Thank you.
It was a very enlightening day. All right, so the defense is up, questioning the prosecution witness, Brooke Carrington, who is the forensic accountant. She was witness, or is witness 27.
You're still under oath.
Yes.
Ms. Nestor, please
So
proceed.
here we go.
Thank you, Your Honor. May it please the court.
Cross-examination.
Good afternoon, Ms. Carrington.
Good afternoon, Ms. Nestor.
You and I have known each other for some time. Is that
We have.
accurate?
That is accurate.
Okay. So I'd like to talk to you about how you got involved in this case. Is it fair to say that you were brought into this case by the gentleman who was working as a private investigator for the trust for the estate?
Absolutely, yes.
And his name is Todd Gabler, correct?
That is correct.
And Mr. Gabler is also someone you've known for a really long time.
I have. Professionally, yeah.
Right. Well, of course. I should have said that. I'm sorry. And you guys even share office space, or did at one point?
No, never.
I thought you did. Sorry. And so initially, when you were brought into this case, Eric Richins' family was really your boss in the matter.
I wouldn't look at it that way. I was hired by their attorney, Crystal Bowman Carter, after Kouri initiated the lawsuit. That's when I came in.
But the work you were doing was designed to assist Eric Richins' family in the litigation. Fair?
Fair, yes.
All right. And during the time that you were working for the family or the estate or the trust, did you also do some witness interviews with Mr. Gabler?
No.
You didn't go to any interviews of witnesses with him?
No, I did not go to any with him. No, I don't think so. No, I didn't.
And then at some point you stopped. It sounds like your work kind of trickled off for the estate or the trust when they got a new lawyer, right?
Right. I've known that firm for a long time, and I'm usually on the other side. So they use other people for their forensic accounting. And so I was not surprised when the estate got, when the trust, the estate got new lawyers, that they didn't adopt me as well, which is fine.
That's okay. Yeah. And then how is it that you became associated with the prosecution team?
I don't know how that happened.
They reached out to you?
They did.
And Are you aware whether Todd Gabler recommended you?
I have no idea.
And Mr. Bloodworth asked you on direct. He mentioned that they've retained you at your normal rate. Is that right?
That's correct.
So it looks like you've done quite a bit of work,
I have done a lot of work.
binders worth of work.
Yes.
And so how much have you been paid by the state or by the county?
I don't know exactly, but it's probably about $200,000, which is a lot.
All right. Now I want to talk to you a little bit before we get it.
Do you think it's worth it? Do you think that her rate that she got paid $200,000 was worth it? I say absolutely, right? If you saw the stream yesterday and you saw all of the stuff that she put together, she had to start from scratch. And she went through all of the bank accounts and tried to align it with whatever. Let me tell you, Kouri Richins did not keep the greatest records. And in fact, when she said yesterday about the tax return that she had filed, it was wrong because she didn't provide her tax accountant with the proper information. So without having every piece of evidence or a piece of information given to her by Kouri, which Kouri is not going to do, she had to go through, and it's a puzzle. She had to go through and piece it together. She basically had to create a puzzle itself. And she had little bits of clues and stuff from bank accounts. And then she obviously through subpoena records, etc., she got more pieces of the puzzle. But she said that there was areas where she couldn't account for things. $400,000 she couldn't account for. She doesn't know where it went. She doesn't know, or she can't attribute it to something. I think she did an amazing job piecing it all together, not knowing what she was getting into, and I think it was well worth it. I mean, that is her job. She is an expert. She gets paid to do this. Go into account, people. You won't find a better job. It's boring and tedious, but it might pay well.
Into details about it, the nature of the house flipping business. I think you talked a little bit about this on direct, but the idea of someone who's in the business of flipping houses is you want to buy a property that appears to you to be undervalued for sale. Is that fair?
You want to get a good deal on. Is that what you mean?
Sure.
Yes.
So you look for something that maybe is a little below the value of the property.
Fair enough. Yes.
And the idea is you do just a little bit of rehabbing, right? You don't want to sink a ton of money into it or you're going to not make a profit.
Well, it depends, right? It depends. I mean, it depends on where where it's located and what's the upside. Miss Richins' properties spanned a lot of those. Some of them were very small, easy fixes and flips. And then like the one that we were talking about, the Mill Creek project, that was enormous. The Provo project was enormous. So it could be any of the above.
Sure. But if you want to make money, the goal is to do as little rehabbing as you need to flip the property. Is that fair?
I think that's fair. Sure.
And as I would say, put a little spit and polish on it and then get it ready for sale, right?
Fair enough.
Okay. And then the goal is to flip it as quickly as you can for more than you paid for it.
That's correct.
And enough more that it covers whatever you paid to spit and polish it.
That's the idea.
All right. And the nature of this business is the goal is to hold that property for as short a time as you possibly can before you flip it.
Absolutely, especially because of the way the financing works.
Right. And let's talk about that.
Okay.
So because you know the goal is only to hold that property for just a really short time, you often use what are called hard money lenders, right?
That is true.
And we did hear you talk about that on direct, but just as a quick refresh, because I think that was 20 years ago, the hard money lenders lend money without all of the formalities that a bank requires to lend money, right?
For example, that is correct. For example, the underwriting process is almost nil.
And to sound really kind of juvenile about it, it's basically wealthy people that are willing to loan you money short term for a short period of time at a super high interest rate, right?
Right. And they assume the risk of that. And in exchange, they have very strict zero tolerance default clauses that make a loan just skyrocket in cost and interest if it's not met, if those terms are not met.
And the reason for that is this is a risky business, yes? For both sides.
I'd say it's risky for the borrower.
And for the lender, because they're not putting someone through all the vetting that a bank would. They're just trusting them that they're going to show back up in 90 days and pay them off.
But you're missing a key piece. They secure that property with their trust deed. so they've secured their collateral.
Totally fair. That's absolutely right. So riskier for the person that's doing the flipping than it by far than for the hard money lenders.
Yes.
But the hard money lenders generally do not expect to get paid monthly payments in between when they loan the money and when they get paid back. Fair?
Well, it depends. And I think that that's usually a true statement. Kouri Richins had most of her loans that were like that were 6-month balloons. There was nothing expected. In fact, when the subpoenas went out, I expected to get all these ledgers back, and nobody has a ledger because they didn't care. They just knew when the balloon was due, and they were going to get their money or their property.
Exactly right.
Miss Richins had 3 property. Well, she had 2 lenders that had monthly payments.
And because of what you just said, the hard money lenders have what we call a promissory note, just a promise that if I don't pay you like I promise on this note, you can get the value, you can get the property and sell it yourself and recoup your money, right?
Yeah, there's a promissory note on any kind of a loan.
So when you put all those loans up there, they're backed by the collateral, the house.
Can you clarify which loans they put up where?
Sure. And that was a broad statement. So
I just want to make sure we're talking about because the loans I put up there are the payday loans, and those are different.
I'm talking about the hard money lenders.
Okay.
When you showed some notes, for example, where I think Matt Strong paid a couple $1 million on one property. Somebody else paid $300,000 on another property. All those loans were backed by the property. They were totally secured.
For the first position lender, they're totally secured. The others are secured with the property, with the caveat that they are in second, third, and fourth position. For example, the Midway house, the Legacy Way house, the second, third, and fourth position lenders did not recoup any of their funds on
Okay,
that.
well, we'll get to that in a minute.
Okay.
But if Kouri were to default on a promissory note and they went after the property and took it and sold it, Kouri would owe zero because they would have recouped their note from the sale of the property,
That's true. She'd owe zero and she would have made zero.
right? But she'd owe zero.
That's true. That's true. Yes.
Okay.
Well,
Did you-
I'm sorry. It's probably. She would probably owe zero. I don't know. They could go after her for the residual. I don't know of a situation where that happened here, but
Did you do any analysis of the average length of time Kouri held the properties before she would flip them?
no.
Okay.
I do know. I do know about every property, but I haven't compiled that into a schedule.
You mentioned you interviewed, I believe, some of the hard money lenders. Is that right?
That's right.
And prior to actually, let's do this. Prior to Eric's death, every one of those hard money lenders got their money back from properties they gave to Kouri, or properties that they lent money to Kouri on, correct?
Let me think about that. Prior to Eric's death.
Yes.
No, that's not true. There's one of her early projects, I think it's Casperville, where she ended up $28,000 in the hole
Okay.
on that project. So she walked away with no buyer proceeds from that, and that was not a successful project. And I haven't looked to analyze who got what, but that would be a situation where not everybody got their money back.
Do you know whether she made them whole with her own funds or in some other way?
I have not seen anything that reflects anything like that.
So you don't know.
I don't know. No.
Okay. So except for one occasion, on all these other deals that were done before Eric's death, all the hard money lenders got their money back from the deals they did with Kouri, plus interest.
I would say that's probably true, but I may come up with another one. I try not to deal in absolutes.
All right, now I want to talk about these.
Okay. So some of them she made whole, but she's in the business of flipping houses and making money. She's not making money. And if you're not making money and you're spending this money, you're not getting anything in return. And I cannot believe that a whole 100% that everybody was whole. I don't think that's true. I want to know if she's being sued behind the scenes by some of these other lenders, etc., for whatever, and or is she being sued by her friend that she paid the $45,000 to, unless she made her whole too by
bank accounts.
magic.
And I appreciate that you were trying to, excuse me. Sorry. I appreciate that you were trying to track insufficient funds, things that popped back. I call them in my parlance bounced checks. That's what I know them as and have done. When you were tracking these, did you ever go back and see how or if or when they were made whole?
They weren't made whole.
Okay. So
Oh.
the bank continued to keep open accounts where $300,000 worth of checks were bounced. And you're saying there's no resolution of that on either side. The bank that sent it, the bank that got it. It's just, they just let her continue to have checking accounts where she bounced over $300,000 in checks.
So can I answer your question
Sure.
with a description? So the Navy Federal accounts really never had any significant money in there at any time that I looked at. So there was no like deposit that came in 2 days later that just missed. There was never an attempt to try and cure that check on the Navy Federal side.
Let me stop you right there. Did you ever follow up and find out if Kouri made the person she wrote the checks to whole with another check out of another account in another way?
Well, we're talking about a couple different things. The checks that I'm talking about are the ones that she wrote to herself.
Okay.
She's the payee. So then, can I come back to that question? I'm trying to answer the prior one. Okay. So on the Navy Federal side, no, there was never an attempt to cure that.
Okay, but wait, stop right there. On the Navy Federal account, she was writing checks to herself.
That's right.
So did you track whether she actually put money in the account where she put the hot check, as I would say, to cover it later?
Well, and that's what I'm getting to. So she writes a set of checks to herself, and they get deposited into either the K. Richins Realty 6577 or that Kouri 5244. Those checks go in, and eventually, they're returned unpaid by the bank. And so that makes the balance go way in the hole.
Sure.
Eventually, there are funds that go back to the account.
That's my point.
And my understanding of how banks work, banks and credit unions, they work, in answer to your question or your wondering about why would they allow her to continue going if she's bouncing all these checks. Financial institutions don't look at just this account or just the accounts by this person. They look at the relationship. And so we've also got Eric and C&E Masonry and whatever else. And so they will look at it from a business point of view. They don't want to kick her out because they've got another account that is making them money or is being dealt with differently. So that's the answer to your question, why they wouldn't just cease and desist and kick her out of the bank.
Because somewhere in these accounts, there's enough to cover these bounce checks, or they would shut that down.
The way you're saying that is not correct, and that's not what I just said.
Okay.
They will look at the totality of the relationship, and they want to honor that relationship. There's not a scenario in which they would dip into C&E's account to pay Kouri Richins or K.
Right,
Richins
they
Realty's
can't do that. That's
checks.
against law.
So that's an important distinction of where I
Okay.
would quibble with what you're explaining.
Okay. I never saw anywhere in your myriad of check statements that we went through that there was one where she was a negative $300,000. So those checks were covered. Yes.
No, they weren't.
Okay.
No, could I please explain what the negative 300,000 is? So it's a simple exercise where I looked at the bank account statements and I just added up the transactions that she tried to pay. And not all of those were paid. A lot of those were returned unpaid. So I'm not making any judgment call. I'm not making any conclusion other than looking at that K. Richins Realty account 6577. That is what she tried to pay unsuccessfully without a fee.
And then other funds went into that account subsequently
Right.
every time.
Well, eventually, yeah.
Okay. That's
Yes.
it. All right. Now, I also noticed when you're putting up all these accounts, I didn't see any of Eric's. Did you analyze how much money Eric had?
I did look at their family account, and their family account, when I'm looking at an account, it's really easy to try and get kind of a cadence or an understanding of how that account is used and the characteristics of that account. The family account, as opposed to the K. Richins Realty and Kouri's personal account, was consistent. It always had a balance. That's where
Let me
Eric's
s-
paycheck went in.
Let me stop you right there.
Mhm.
Apart from Eric's paycheck, where else did all the money from the family account come from? Apart from Eric's paycheck.
There were distributions that came in from Eric's work, and there were occasional, I know you've asked me this question before, and Kouri Richins did not put more money into that account than Eric Richins did.
Did she put a lot of money into that account?
She did put a lot of money into it, yes.
And that account was used for family, for paying mortgage, for paying trips, all their personal expenses, right?
Not all of them, but that is the family account. That's where the kids' expenses were paid. Not all credit cards were paid from there because not all credit cards were family credit cards.
And Kouri was regularly contributing to that account out of her business accounts.
I would
Yes?
not agree with that statement.
Okay. So we know Eric's paycheck goes into the family account.
That's
What
right.
about the other accounts you mentioned for Eric? You said Eric had a separate account.
There was a personal checking account, and I had reviewed that initially. It looked like it was squarely Eric's account, and the 5244 was squarely Kouri's personal account, and so I kind of set those aside. She used her personal account for her personal expenses, and he used his for things that appeared to be his.
And you do not know the arrangements that Kouri Richins and Eric Richins had as a couple about when they would make money available to each other, did you?
I don't.
Okay,
don't
so
know that.
how much money was in Eric's personal account?
Habitually, there was enough to pay whatever was attempted to be paid from it. I know that my recollection is it had, 10,000, 20,000, something like that. I don't recall it bouncing checks, and I don't recall it going into the negative.
Okay, but you did not provide that to the jury to review in terms of assets that were out there for this family.
Objection, Your Honor.
He's not.
Right, what's the
Your
objection?
Honor, can we approach?
Of course.
Is Eric's... We're not really looking at Eric's
We have not-
accounting. I'm sorry.
Your Honor. So just to be clear, we have not seen today in the multiple hours of your direct anything about that account that Eric had.
No, that's correct.
And you also mentioned you looked into C&E accounts,
That's right.
and C&E is the name of Eric's business,
Eric and Cody, right, his business partner.
right? And that's where he kept his business profits, correct?
They kept theirs, yes.
Okay. And I didn't see those accounts today. We haven't talked about how much Eric was worth while he was alive, have we?
No, Corey didn't have any control or access to the C&E account.
You understand they're married.
I understand that they're married, but that is not, that's a business account that was shared between two business partners.
Okay, but business owners can do something called a draw, right? What's a
Right.
draw?
Your Honor, objection. Scope.
Yeah, you're gonna have to help me out. Do you want to approach for a minute?
Right. So, Mr. Bloodworth is objecting because of the scope, right? So when you ask she's the prosecution's witness. They didn't really talk about Eric's business except for the fact that Kouri had used Eric's bank statements from C&E to state that she had money in her account, right? So when Ms. Nestor is asking questions about C&E business and their accounts, they didn't quite get into that. So I don't think she can get into it. I'm afraid to zoom too much.
Multiple
Oh, here we
for
go.
their business, correct? That's the business accounts. That
Hang on. All right, here we go.
the C&E accounts, that's the business accounts that Eric and his partner put money in for their business, correct?
That's where their revenues and their expenses were paid, yes.
And the jury saw multiple examples of C&E checking accounts today during your direct, did they not?
That's right.
And routinely, the dollar amounts in those accounts were in the strong six figures, correct?
Routinely, yes.
Okay. And you don't know what arrangement Kouri Richins and Eric Richins had about whether or not he would invest in her business, whether or not he would be a silent partner, whether or not he would help her fund her business. You don't know that, do you?
No.
Okay.
Did he?
All right. I want to
Didn't see
talk
any evidence
a
of
little
that.
bit about the Barney house,
Okay.
Chelsea Barney's house. You guys
Mm,
spent a couple hours on that, or about an hour and a half on that today in direct.
Yep.
And as I understand your testimony, Ms. Barney was going to provide $45,000, or did provide $45,000, which you traced all through Ms. Richins' accounts, to Ms.
Yep.
Richins to be used at a closing in the future, correct?
To be used at a closing that day.
That they never had the closing.
Well, they didn't.
Right.
Right.
My understanding of that whole text string is that there was this closing that was going to happen imminently. And this
Right.
was the $45,000 down payment that Chelsea was paying toward the house to then be in her name.
Right.
Right.
And the $45,000, well, strike that. Let me back it up just a little bit so it's not confusing. Kouri Richins Realty had already purchased the Chelsea Barney home prior to all this, correct?
That's right.
Yes.
And you went through all the effort she was making to try, well, let me ask it this way. When it's first purchased, the idea was probably to flip it, right? Like she does all her business.
No.
She was going to keep it.
She was going to keep this one.
Okay, but she had hard money lenders the same way she did on her other flip properties
Well,
originally.
remember, she's got those two different kinds. She's got the hard money where she's got a 6-month balloon and she doesn't have to pay anything in between. And then she's got the other ones where she has a due date, a maturity date, and she has to make those monthly payments. This was one of those. And so her original loan was due January 8th of 2022. And that's about the time that this transaction with Chelsea is going on.
Okay. And as you explained in your direct, she was trying to shop around for a long-term mortgage to get better terms of the mortgage, right?
Right. With David Ige and Excel, she was
Right.
trying to refinance a few things.
Right. And while she's looking for a new mortgage package, Chelsea sends her this $45,000, right?
No, I think I could be wrong about this. She had been dealing with David Ige since August and September of 2021. It was right about this time that everything just fell apart because he needed wet signatures from Doreen and he never got those.
Okay,
so
so
everything
try
fell
to
apart.
focus on my question if you can.
Okay.
While Kouri's looking for a new mortgage lender, a new mortgage package, during the time that she's shopping for people and you kept putting up all the ways she's trying to get new lending, that's when Chelsea provided to Kouri $45,000.
I don't know. I don't know what she's thinking. I don't know what she's doing. What I can say in response to your question is that I'm aware that she had been dealing with David Ige on a number of properties over a number of months. I don't know who else she might have been shopping, looking for a new loan. I know that she had a deadline and she had extended that loan.
Okay,
I
I
would-
thought you said she was shopping with Excel.
She was.
Okay, so that's one person she's shopping for, right? You brought that up.
I'm not trying to argue with you.
Okay.
I'm trying to understand and answer your question. You said she's shopping to all these lenders. I don't know that. I know that she was consulting with David Ige and had applied for a loan to refinance a number of properties through him.
Okay.
And there were 3 different phases with him trying to get that funding. Doreen was brought in trying to get that funding, and it did not come to pass.
Exactly. So the $45,000 was not put in a trust account at a closing firm, right? It was given just to
No.
Kouri.
That is true.
Right.
And
Wait, please
Okay.
wait and let me just
Sure,
ask my
sorry.
questions.
my apologies.
So the $45,000 is given to Kouri, not in trust, not to be held, was given to Kouri, correct?
That's right.
Okay. As long as Kouri Richins shows up at the closing, whenever it's set with $45,000, she's complied with her agreement with Chelsea, correct?
I suppose that would be true.
So if Kouri knows that she's got money coming prior to that closing that will more than cover the $45,000, and she uses the money quickly to pay some quick debt, she still hasn't violated her agreement with Chelsea if she shows up at the closing with $45,000, correct?
Your Honor, foundation.
Overruled. Go ahead.
I believe some of that requires a legal conclusion. I'm not a lawyer, and that's for the jury to decide. If in that scenario that you've described, that would be her kind of floating that money,
Right,
just saying, I
Right.
know eventually I have to come up with $45,000.
right.
So in your scenario, okay.
Okay. And then what happened before they got to the closing?
Okay, but it's still you can put it in whatever kind of box you want to put it in and put a bow on it and wrap it up. The fact of the matter is that Chelsea thought she was paying $45,000 down on that house. Kouri took that money and used it for something else. Did Kouri ever make that whole? Did she ever pay her back the $45,000? Did she ever do what she said she was going to do? You're tap dancing around it.
Do you happen to know?
Rebecca.
Okay. And then what happened before they got to the closing? Do you happen to know?
I'm sorry, that's a big ambiguous question. No, I don't.
Okay.
I don't know what you're after.
Do you know whether Kouri was arrested before they were able to do the closing?
Kouri was arrested 14 months later.
Are you
Or-
talking about the closing on Chelsea Barney's house?
I think
She
what you're
doesn't know.
asking me is, so Chelsea Barney gave her the money in January of 2022.
Mhm.
Eric died in March of 2022. Kouri was arrested in May of 2023, coming out of the title company in which she borrowed $95,000 using that home as collateral.
Okay.
Along with the Roy house that Kouri also owned. And then she used that $95,000 for debt payments of her own.
Okay.
So is that the closing you're talking about?
Yes.
Okay.
Ma'am, I have got to back that up. You are joking me. Girl. Oh my gosh. What the fudge?
Out of the title company.
Hang on.
Eric died in March of 2022. Kouri was arrested in May of 2023, coming out of the title
May of
company in which she borrowed
2023.
$95,000, using that home as collateral.
Okay.
Along with the
Okay.
Roy house. Kouri was arrested in May of 2023, coming out of the title company in which she
Hang
borrowed
on.
$95,000, using that home as collateral.
Okay.
Along with the Roy house that Kouri also owned. And then she used that $95,000 for debt payments of her own.
Okay.
So is that the closing you're talking about?
Yes.
Okay.
All right. So then I want to talk to you about the HELOC. Katie, can you please bring up 5-89D? This is in evidence, Your Honor.
All right.
All right. And that's where you kind of kept track of the balance on the HELOC, right?
This is correct.
And
yeah.
Katie, can you blow up the dates on the across the top line? Make them bigger. That's good. So this begins in March of 2019 when the first 50,000 or so was drawn down out of the HELOC, correct?
Yeah, 60,000. Yes. And can I say something about the dates before you continue?
No, I
Okay.
appreciate you waiting on my question. So from 2019 until 2020, there was a significant amount drawn down
No,
on
you
the line
cannot.
of credit, correct?
That's correct.
And then it looks like in November of 2020, there was a nice little payment made that made it smaller.
It was in October.
October, thank
Yes.
you. Looks like November on that, but I believe you. If Eric Richins' sister testified that Eric became aware of the use of this HELOC back in 2020 and it precipitated his creation of a trust, would it be fair to say that if he knew about this back in 2020, for the whole rest of that chart, Eric is still utilizing the HELOC, Eric and Kouri?
Objection, Your Honor. Cause for speculation.
Sustained.
Is it fair to say that there's no more significant payments made by either Eric or Kouri all the way up until Eric's death?
There's never evidence that Eric made a payment. So,
All right.
yes,
So is it fair then to conclude that if he knew about this in 2020 and never made a payment until his death 2 years later, that he was aware of this and could have checked it at any time? His name is on the account, right?
Objection, Your Honor. Cause for speculation.
Sustained.
Yeah.
His name is on the HELOC, right?
that's correct.
So is in all your experience and your expertise, if he calls the bank and says, hey, what's the balance on my HELOC? And it's in his name, as you said on your exhibit, they're certainly going to tell him, right?
Objection, Your Honor. Cause for speculation.
It lacks foundation.
Your Honor. Okay, let me ask it another way.
Your Honor.
Eric's name's on the HELOC. You put that evidence in yourself, right?
Your Honor, I'm trying to ask this witness and she's not answering my questions. Make her answer me. He's like, you got to lay the foundation before you can do that.
Yes,
That's
sir.
that's correct.
Okay, let's go back.
Eric's name's on the
You can get
HELOC.
it.
You put that evidence in yourself, right? Yes,
That's
sir.
that's correct. Yes.
As an owner of a HELOC, do you have access to your own statement balance at any time you want to look at it?
Yes.
Okay.
Somewhat of a good point, right? We don't know what Eric said to Kouri about the HELOC and whether or not she's going to pay it back or whatever. And we don't know if he periodically checked on it. We have no idea what Eric's knowledge of this is unless somebody says something later on. Remember, the other sister, Amy, hasn't testified yet.
Now I want to talk about.
Do you have any context clues?
I want to talk about the tax returns, and I just want to make sure I got this right because I hear the word tax and it's not my favorite word. You're basically saying that she over-reported her income on her taxes. Is that fair?
No. Well, the net income. What I'm saying is the accounting that she gave to her tax preparer, her CPA tax preparer, for the expenses on her properties did not match what her own notations in her bank account.
So because of that error, she paid too much taxes, in your opinion, like a lot too much taxes.
She had a larger tax liability. And remember, I also said there's that big category of loans. All those payday loans are not on the CPA's financial statements, like for 2021, for example, there's nothing.
Well, and if she'd have reported the loan, she'd have paid even less taxes, right?
Absolutely.
So she way over reported her taxes and paid too much taxes.
Whether or not she actually paid them, that's a different story, but the tax liability was significantly larger than it would have been had she accounted for everything correctly.
And you stated through Mr. Bloodworth that it's possible she did this just to look successful to people.
That is not what I said.
Okay.
And a note about the 2019 tax return, I don't know if it was ever filed.
Well, that's a good point.
I do know that she prepared it and she did submit it to the government as part of her PPP loan forgiveness.
Did you ever review the packet of information of what she actually did submit to her accountant?
Yes, I've looked at every page.
And do you have any evidence as you sit here today that she ever provided proof of that tax return to any of her hard money lenders?
I don't know which, other than giving, submitting it to the government and to through UCCU Credit Union for that loan forgiveness. I don't know if she ever showed that to anybody else.
So it's fair to say that if she never did, it's pretty hard to argue the whole reason she way overpaid her taxes was to look successful to people if she never shared it with anyone. Fair?
No, because you're talking about just that one tax return. Greg White did not prepare that tax return. Greg White prepared other tax returns for her.
Do you know how Greg White is related to Eric Richins or to Kouri Wright? I'm sorry, his business partner.
No, I don't.
Did you know they were family?
No.
Okay, so now I want to talk about also just very quickly, because I'm about to wrap up and I don't want to leave this behind. When we were talking about the bank statements that you put on, you don't know, you don't have any personal knowledge as to how Kouri got the C&E bank statements, do you?
I do.
You know how she got them?
Yes, I do.
How do you know that?
I've interviewed Kouri Wright, and he has, there was a time when, well, there are two reasons why she would have had access to those.
Okay, let me stop you. So you're speculating on how she could have gotten them, right?
No, I'm telling you what I understand from my work.
Okay.
Okay, so there was a time when Kouri Wright and Eric Richins, being the business partners, had their wives associated with the back office kind of stuff, you know, doing the books for the business and that sort of thing. And there was a time that those responsibilities were shifted only to Cody's wife and taken away from Kouri Richins.
When was that?
I'm sorry, I don't recall.
Okay, so stop there.
Okay.
The statements you introduced today from
Mhm.
C&E were all in 2021. Do you know whether or not Kouri had those responsibilities taken away from her prior to 2021?
I don't remember what he said.
Okay, so if her responsibilities were taken away from her by 2021, do you have any knowledge of how she would have gotten those C&E bank statements?
My understanding is the family computer at the house was actually the a C&E laptop, I should say. And I don't know if it was the C&E, but it was a C&E.
So she could have pulled it off her husband's computer, right?
That's-
Yeah.
That's possible.
Or her husband could have pulled it off his computer and handed it to her.
He could have. That would have been a really
True.
curious thing for him to do.
But you don't know. All right. Now I want to talk about the profit and the tax.
Ma'am, are you alluding that Eric gave her the bank statements so that she could go ahead and do this forgery? Really? You think that Eric Richins, who is a person who is very conscientious about his business partner being in the positive in his bank accounts, is going to be like, sure, here you go, honey. Here you go. Take my bank statement and yeah, go ahead and just, you know, forge some stuff. Yeah, go right for it. I don't believe so.
Taxes, the profit and loss analysis, all of these things that you were doing. Is it fair to say that someone who's not a you, someone who's a me, who barely can balance their checkbook, that we judge our success on what we report to the IRS every year? Did we make money? Did we lose money? Is that fair?
That's speculation. Speculation.
For speculation, not sure foundation, not sure where we're going, really.
I'll give Ms. Nestor some limited latitude. Let's see where this goes, Ms. Nestor.
Is that fair that the average person that's not a financial expert,
Right.
if you said, did you have a good year financially? You look at your tax. and say, yeah, I made money this year.
I think first it would be, do I have money in my bank account? Can I pay for groceries after I pay my car payment?
Okay.
That sort of thing. If you're talking about just the average kind of concerns that a person or family would have, I will say yes, that what you're talking about does play into that. I don't know if that's the first place I would look. I'd look at my day-to-day, but I think I understand what you're saying, and I would say that that's part of it.
Okay. Do you have any reason to believe that there was that there was some forensic financial person back in 2020, 2021, 2022, reviewing Kouri's business for her and doing what you've done here today?
I doubt very much that there was much of any of that. There's no QuickBooks evidence that I can find. I don't see any. I have not seen any ledgers. The stuff that Kouri Richins submitted to her CPA was on spreadsheets, and it was very detailed. It just wasn't correct.
Okay. So, and you certainly concede.
You're telling me that Kouri Richins, who might have helped with the business of C&E, had some knowledge of doing the books, and perhaps maybe it was taken away from her because she didn't know what she was doing. If you take on a business, you need to know how to do your books. There's YouTube videos for that.
That what you're doing here today is looking backwards in time and trying to analyze things that happened in the past with someone you've not been able to talk directly to, correct?
That is correct. I've not spoken to
Yeah.
Kouri Richins.
So you don't see in all the hundreds and thousands of documents that you reviewed to come up with your conclusions today, you never saw any suggestion that there was someone auditing her business?
No, I think that would have been a benefit to her.
Sure would have.
Yeah.
You never saw anybody doing a profit and loss analysis by property in her
Well,
company, in her business?
She should
you
have.
know, her tax accountant was doing that based on the stuff that she gave to him,
Yeah, and you said he got it wrong, right?
based on the stuff that
Okay.
she gave to him. Sure.
And you didn't see that she was conferring, you didn't see emails with financial advisors or business advisors?
No, there's an email string between her and Matt Strong where they talk about how to reduce tax liability by retaining rental properties.
And she was getting advice from him, right? Because she didn't know that stuff. And he was helping her.
I don't know why.
You read the email.
In that specific instance, but I'm sorry, I thought your question was a little more general. No, I don't think she was, I think she was so busy running her business, acquiring properties, trying to fix them up, acquiring funding, capital, wherever she could grab it, that the tracking of finances was completely just not on the priority list.
And you don't have any personal knowledge as to how involved Eric was with her. If she talked with him about it every night, if she talked with him about it every morning, you don't know.
No, I do not.
And did you even know that the day he died, he was out working on one of her properties, spreading gravel? Did you even
I do know that.
Okay. And you don't know whether or not she got advice from other people besides her husband, Matt Strong. You don't know.
I don't.
Objection, Your Honor, misstates the testimony.
Overruled. The jury can hear both pieces of what Ms. Carrington just said.
And speaking of Matt Strong, there was one thing I did want to bring up. Katie, just for the witness only, Your Honor, could we please pull up Exhibit 1066? Did you review this when you were looking at all of your documents?
Yes, I did.
And you relied upon this in terms of making conclusions about potential rehab of the Midway Mansion?
I did, absolutely.
Okay, Your Honor, I move to admit Exhibit 1066.
I can't, Katie, can you zoom in? I can't see what it is. Okay, from Matt to Kouri. So the bottom half is from Kouri, right?
Yes, sir.
And are you seeking to admit the entire thing or just the top half?
Yes, sir, the entire thing.
I have no doubt that Kouri Richins talked to Eric Richins about her business, but something tells me she didn't tell him how deep in debt she was. She didn't tell him that she'd gone to get the pay loans, that she was robbing Peter to pay Paul. I guarantee you she didn't tell him that, because my thought would be that he'd be like, honey, this isn't working out for you. You need to stop. You need to focus on this. Don't focus on that. Work about this and work about that. And I don't, if he gave her some advice, I don't think she listened to it. But yes, sadly, he was at the property the day that he died. Use and abuse. I also want to mention that when you saw the text exchange, he had her listed as Princess in his phone. Just could it be a Wuthering Heights situation? I don't know, but I mean, come on. Now, they can't give bad character notions about Eric. They can allude to some things if Eric was a bad person, like if he did abuse her or did some things, she could bring that up. But so far, I haven't heard anything. Now, mind you, we're still in the prosecution's case. I'm not sure they're in sidebar. I'm like, what are we waiting for? Whether or not this 1066 is going to come into evidence. Maybe they need to do some redaction.
Once you read revealing what is
Objection regarding Kouri's side of this conversation is sustained.
without revealing what is in this email or commenting on what was said in the email. Once you read this, plus the email that we put up on the screen that showed Ms. Richins did not have the $3 million available to rehab, is it your understanding as you were doing your analysis that there was never an intent to do a significant rehab on the Midway property?
I understand that's kind of where she landed.
Court's indulgence for just 1 minute. I'm very close.
Who's that gentleman? Who are you?
I do want to talk about one more thing before we wrap up, and that's this concept of valuation.
Okay.
You made a statement that a house is valued at whatever someone's willing to pay it for it, right?
That's not just my definition. That's the IRS, and that's
Okay.
business valuation 101.
Certainly, if I had 2 houses and I decided I wanted to give you one for a great deal because I think you're great, and I said, you know what, Ms. Carrington, I'm going to sell you my house for $5. Doesn't mean that my house is valued at $5. It means that's what the value you put on my house or that I put on my house, right?
That's the value that you put on your house, I suppose. Yeah,
Right.
sure.
And the county, every year we get a little letter from the county telling us what they think our house is valued at, and that's what they tax us at, right?
That is the assessed value. That
Right.
is not what they actually think it's worth, but that's the assessed value.
And it's kind of a rule of thumb that the county actually does us a break and usually values it way below what it actually is, what you could sell it for.
Yeah, they at least in Salt Lake County, which is the county where I'm most.
Not where I'm from and not where I came from. No, they value when you bought the property, they're like, hey, it was $300,000. You bought this house for $350. Guess what? It's $350 now. I'm gonna go move to Summit County
Familiar,
then.
they do it every 4 years, and they draw it from comps, comparable properties.
Right. And so you're certainly not suggesting to this jury that the Midway mansion was only worth $2.9 million just because that was the purchase price, right?
I think every indicator is that it wasn't worth a whole lot more than that.
Do you know what it actually ended up selling for?
I do.
How much did it actually end up selling for?
It was about 3.4 million. Matt Strong sold the note. It's a complicated transaction, but Matt Strong foreclosed on it.
And
and-
wait, stop right there. He foreclosed on it after Kouri was arrested, correct?
It was in the works already. I think the actual notice of default was filed shortly after. but
After Kouri was arrested.
Right, like 4 days after, but it had been coming for many months. I mean, we have to look at the totality of the circumstance. She had defaulted on this many months before, and there were indicators that this was coming one
So-
way or another.
If Kouri had been able to stay till the very bitter end when the sale was made, they would have made $1.5 million.
No, nowhere close.
What did you just say they sold it for?
He sold it. He sold the note. So this,
Not the note. What did they sell
well,
the house?
but this is part of the transaction. He sold the note to the current owners. So what that meant is he sold the rights to collect on this debt from Kouri Richins. And at the time, he sold that for $3.7 million. And then it went into the trustee sale because it was foreclosed. And the Harns, the current owners, paid $3.4 million for that property.
So the current owners that live in it now bought that property for 3.4 million about 2 years after Kouri bought it for 2.9.
Let me do the math. They bought it in, so she bought it in March of 22. I think it's a year and a half,
Better. 18 months later, they made
somewhere like that.
about $500,000 in profit. flipping.
No, because they bought it from themselves,
What was the purchase price that it was ultimately sold for?
3.4 million, but they bought it from themselves.
I understand. Do you know the condition of the property when they bought it for 3.4 million?
I do.
Okay. Had they rehabbed it?
No.
So they hadn't done anything to it and they sold it for 3.4.
And they also hadn't dealt with the Armored Corps of Engineers.
So had they been able to do all that, it would have realistically sold for more.
If it, okay, let me understand your question. If it's completed, finished, and all the issues with the wetlands and having to grow the new plants and all that stuff,
Mhm.
if that's all, I would think it's worth more.
That's a hypothetical.
You're here today to give a snapshot of a financial condition at a certain moment in time, right?
No.
Okay, let me rephrase it. You're here to look backwards at Kouri Richins' financial situation, right?
Could you please restate that?
We're
What
here-
time frame are you looking
Backwards, the past.
from
We're here-
today?
From today, backwards from today, you are here to evaluate in the past what Kouri
Yes.
Richins' financial
Okay,
situation
no
was.
projections for the future.
Correct.
Okay, yes.
But certainly, and you're here to do that, to come up with your conclusion that at the time that Eric died, she was financially, I believe your words were, in distress. That's your conclusion.
Yes.
Okay. And certainly you would agree with me that every single person who's in financial distress does not opt for a solution of murder to fix their distress.
Oh,
Is that fair?
You did. No, you did not. Woman! You just did not say that. Oh, I have to go back. Mr. Bloodworth. Mr. Bloodworth. Oh my gosh. Oh my gosh.
Certainly, and you're here to do that, to come up with your conclusion that at the time that Eric died, she was financially, I believe your words were, in distress. That's your conclusion.
Yes.
And certainly you would agree with me that every single person who's in financial distress does not opt for a solution of murder to fix their distress.
Objection.
Is that fair?
Your objection, Mr. Bloodworth.
Speculation.
Sustained.
Look at her face.
If in fact Ms. Richins was in financial distress, that does not, you're not here to say she killed her husband, are you?
That's for the jury to decide. I am not making any conclusion about that at all.
Because you don't have any knowledge about that at all.
Well, that's,
Objection, Your Honor.
Answered. Sustained.
Do you have any knowledge personally about whether or not on the night of March 3rd, Eric Richins voluntarily ingested
Ms. Nestor,
fentanyl?
asked and answered.
That question that I just asked?
When she said she doesn't know anything about that, she meant she doesn't know anything about it.
Miss Nestor, you're pushing it.
And nothing in all the 100 and some thousand pages that you reviewed, did you ever see any statement by Kouri Richins written down to anyone, to any of our investors, to anybody, saying, I know I'm going to fix this problem. I'm going to kill my husband and then I'll have plenty of money.
Objection, Your Honor.
Did you ever see any of that?
Overruled. Ms. Turner, you can answer the question.
there's an email between her and Mount Strong where she talks about the inconvenience of being married.
Okay, so does that answer the question I just asked you?
You've asked, I'm not trying to create anything, but you said, is there anything that indicated anything? And, I don't talk like that.
So
Oh,
apart from an email that she sent saying it was inconvenient being married, have you ever seen any suggestion
I think we saw that. I think we saw that in the opening statement, or at some point we did see that email where she said it was inconvenient to be married. Miss Nestor.
You know, I don't talk like that.
So apart from an email that she sent saying it was inconvenient being married, have you ever seen any suggestion in anything in writing that Kouri's financial plan was to collect on life insurance and pay all this money off? Have you ever seen that?
To collect the life insurance to pay everything off. No.
Thank you.
Mr. Bloodworth, clean it up. Clean it up.
Thank you, Your Honor. Ms. Carrington, in analyzing Kouri Richins and K. Richins Realty's finance, did you see any evidence that Eric Richins or C&E was investing in her business?
Not really. There's the Franson Lane house in Oakley, where I can see some checks that were paid and they indicate a draw. So they're from C&E. They get deposited into Kouri Richins' bank account. And then when she sells that project in March of 2021, that's that big spike in my graph, you know, that orange line that's bumping along the bottom and it spikes up. As soon as she sells that Franson Lane, the Oakley house, she pays C&E $217,000. That's about what they had paid in. And the memos on the check say, you know, draw number 1, draw number 2, and they indicate that house. And I have talked to Kouri Wright about that. And he said, I mean, he's explained to me what the arrangement was for that particular house. It was related to the fact that Eric had just learned about the HELOC and he was afraid of losing his house. And so that's why C&E was involved with that particular project. Absent that, I don't see any indicator that C&E or Eric was an investor or a participant in any of the transactions. He's not on any of the bank accounts.
It's exactly what I thought. It's exactly what I thought. Okay. When he found out about the HELOC, whatever houses she had or whatever, he's probably like, listen, you got to get this stuff taken care of. I'm going to help you out. Probably talked to his business partner, Cody, obviously, because Cody knows, because Cody told him. And was like, all right, you got to hurry up and get this house and sell this house, etc., so that you can get the money out. We're going to go ahead and help you with that. This is the agreement, or whatever the circumstances were. She did it. She paid them back. And perhaps maybe then that money was supposed to go to the HELOC, because she did pay some of it. Oh, Eric, honey, you should have. Well, he might have. It doesn't matter. Because I'm just thinking, like, okay, I can't go there.
It's not on any of the real estate documents or loans or anything like that.
Does the accounting suggest that C&E money put into the Franson Lane project was a bailout?
I don't understand what you mean.
Was that money needed to see the project through to completion?
Right.
It spanned the rest of the project, if that's what you mean. And it was significant, you know. And then they were paid $217,000, which was about so K. Richins Realty and Kouri Richins got $406,000 from that, and then Kouri got $60,000 in commissions from that project. And then once that hit the bank account, other expenses, let me say that, were paid for that project, and then the 217. So whether or not that was a bailout, I don't know if that's how they would term it, but it's my understanding it was not expected as she went. Eric Richins and C&E did not expect to be participating in that project at the outset. It was somewhere in the middle.
Other than that Franson Lane project, any other C&E or Eric Richins involvement in Kouri Richins or her business activities?
No.
Turning back to the Midway Mansion, she closed March 5th, 2022. The value was $2.9 million, but she took out $3.2 million in loans. You said at some point through various trust sales, trust auctions, the house sold for $3.4 million.
That's right.
And before that, it was foreclosed on. Do you know when it was foreclosed on?
It was foreclosed in May of 2023.
So between purchase March 5th, 2022 and foreclosure on May of 2023, did the $3.2 million in debt on the house stay static?
No,
Did it grow?
it did. The clauses in the lending agreements, for example, the loan, the 2.6 million that the Sierra West and Mount Strong loaned to her, that loan agreement says you've got 6 months to repay this 2.6 million plus 15% interest. So it's due on September 4th of 2022. That's 6 months. And then the loan agreement also says if that does not happen, then there's a 2% default fee. And then that's about $50,000 tacked onto it. And then every month after that, it's another 2% that is tacked onto it. And it's still accruing interest. So, and it's capitalized, which makes a big difference. It's not just something else that's out there. It makes the loan principal larger. So that also increases the interest. And upon default, it goes from 15%, which is already expensive, to 28%. So the whole thing just kind of blows up.
So at the point Matt Strong and Sierra West foreclosed on Kouri Richins, how much did she owe on the Midway Mansion?
Let me think back. I think it's about 3.8 million at that time that she owed, that she owed on that note, and then it grew after that, continued to grow after that.
Thank you, ma'am. No further questions.
Is necessary within the scope of redirect, please.
Okay, you just testified that you were not aware of Eric being involved in any of the properties other than the Fransom Lane. Is that right?
That's right.
Okay, Katie, can you please bring up 5-93D2 just for the witness? Okay. So actually, this has been admitted, Your Honor. Can we show it to the jury?
Of course.
So he, as a funding option for Kouri Richins, is that correct on your own exhibit?
That's correct. So that's the 2020 to 2021 time period.
Right.
So she bought that Franson Lane project and she was working on it in October of 2020. She ended up selling it in March of 2021. And so that's why during this time period, that's what I mean. It's the one project. I'm aware of a real estate schedule that she submitted to many of her lenders, and she includes projects that were Fox Lake investments that are Eric and Cody's, his business partners, and she included them as her own, but they were not her own.
Okay, so I'll get to Fox Lake in a minute.
Okay.
But are you aware that Eric was a lender on the Mill Creek property, that he lent $40,000?
I did not see a trust deed or anything, so no, I'm not aware of that.
I want to talk about this Fox Lake business that you just mentioned.
Okay.
This is a business that basically was a flip business as well, right?
I think that was the anticipation, yes.
So Eric started his own flip business with his business partner. Is that right?
And they had a third partner as well.
And who was that?
It's like BlackRock and I'm sorry, I can't remember, but it's an LLC. It's a third party, not related to anybody we've talked about. So it's just completely separate and distinct.
Okay. And do you know whether Fox Lake would have been a separate entity from CNE?
I mean, like, were they a DBA or were they separate?
Correct.
Is that what you're saying? I have looked at that. I believe that they are separate, but
So
Not sure.
did you evaluate Fox Lake and the value of it?
the value of the company,
Mhm.
I've looked at their bank account statements and I've traced their projects and they had nothing to do with Kouri Richins.
Okay, but just bear with me. What was the value that you came up with on Fox Lake?
Objection, Your Honor.
Your Honor, please give me just a little bit of leeway here.
Little.
Go ahead. What was the value of Fox Lake?
Okay, let me ask you to clarify your question. Are you talking about valuing their business?
Just how much assets did they appear to have in your analysis of them?
I know that they had a few projects, and I'm going from just their bank account statements and my 14 schedules that you have, the fours, those are every account I've looked at, and you can see that I have looked at them. The Fox Lake Investments, I know that they had a few projects. I really don't know much about them because they had nothing to do with the family, Eric and Kouri Richins. They had nothing to do with her.
So if there's a prenup that prohibits Kouri from recovering any assets from C&E, it wouldn't apply to Fox Lake because Fox Lake's a separate entity, correct?
Objection, Your Honor. Foundation.
It's just thing.
Is Fox Lake a separate entity from CNE?
I honestly can't remember. I know that they have a separate registration, but whether they are a DBA, a doing business as, and so they're under the CNE, or whether they're separate, I just don't remember.
And at some point, was Kouri Richins listed on the Fox Lake paperwork?
I don't believe so.
Okay. Did you check that?
I did.
And you also mentioned that you traced, you did a, well, strike that,
I need to say also, she's not a signer on the Fox Lake account,
on the
on the bank account.
statement, right?
She's not.
And did you, just to make sure on the accountings that we're talking about, did you ever account for cash?
I'm sorry, which
Cash on
accountants?
hand, like cash that the Richins actually had?
I believe that the original inventory, but this is not in the confines of this case. Let me answer it this way. I understand that there was a safe in the garage, and I understand that there may have been a lot of cash there. That's outside of the scope of looking at the financial statements and things.
So if someone testifies to how much cash was in that safe, that is not accounted for anywhere in here in your asset evaluation.
No.
And you also,
I know there was like $10,000 or something in a backpack or something that was part of the search warrant.
Okay.
And that's,
and that cash isn't in here either.
no.
And also,
I don't know anything about where it came from, whose it was. So no.
and
Right.
also, did you account for Kouri Richins?
You don't know if it's personal, right? You don't know where it came from. You don't know anything about it. It's not attached to any one person. It's not attached to any one business. It's cash. Unless you get direct testimony from somebody.
life insurance policies and their cash value anywhere in your asset evaluation?
No, because she's alive.
Okay, but you understand that some life insurance policies you can draw down out of, right?
I understand what you're talking about, but I think
So can you answer my question? Anywhere in your evaluation,
No.
did you include life insurance value that Kouri Richins holds on herself?
No.
Right. Did you also check on Eric Richins' life insurance policies if they were like whole life, where you can draw down out of them?
they are not whole life.
Okay, they're all term.
Yes.
And the dates of those policies, with one exception, all predated 2020 when he purchased those policies.
Well, they purchased the policies in 2017, I think.
Okay.
Except that last one.
The $100,000 one.
Right. That
Okay.
she got right before he died.
That's all I have. Thank you.
No, sir.
Ms. Nestor, may we release this witness?
Yes.
Okay, Mr. Blevin.
Yes, sir.
Ms. Carrington, you are free to go. You're released from the subpoena.
Thank you very much.
Okay.
Wow. Oh, did we learn anything from the cross-examination? No. They were trying to make it like, oh, she was whole. You're not whole. You borrow money, just like she said, you borrow money from lenders. Even if you get the foreclosed amount back, you still have interest and stuff like that. And then you're not making any money. So you're in the hole. Like you're in the hole. You're not making any money. No. And then we heard about that, Eric had helped out with the Franzine project to complete it. Apparently so that he can help get some money for the HELOC loan. And then when it came to the selling of the Midway, yeah, it might have sold for 3.4 and she bought it for 3.2, but just as she stated, with all of the extra money that she spent in interest because she didn't pay anything, it ended up being like 3.8. So, and then there's more information about a Fox Lake account that Eric had done himself for buying houses and flipping them. Just, oh my gosh, just a lot, right? It's just a lot. But in the end of the day, what the prosecution is trying to allude to is that, listen, Kouri Richins was underwater. She was underwater. I didn't see anywhere that the defense was like, no, she wasn't. She wasn't. Look at her. Look at all. They didn't go through the bank statements. The bank statements are what they are. You saw she had 83 cents in her account at one point. She was robbing Peter to pay Paul. She was getting payday loans. I'm sorry, if you're a business person, the only reason why you get a payday loan is if you know you can pay that off right away. If you're just sitting there waiting for it and it's going to continuing collecting interest, you're underwater and you're not going to recover from that financially unless you have a big payout that you know you're getting ready to do, and it's just like a bridge loan for the meantime, and that you know whammo splam it's going to be done. No, what does she do? I'm going to go buy another house. What did she do? I'm going to go buy a mansion. That's right. I'm going to go buy this mansion. Woman, oh dear. You got to give it to her. She was finagling it for quite some time. And what I think is the SHIT was going to hit the fan, and Eric is going to find out not only did she not pay the HELOC back, but here she is buying more stuff. And obviously he knew she was buying the mansion because they were supposedly celebrating, or maybe he didn't know. We don't know what he did and didn't know. That hasn't been put into evidence just yet. So, all right, we're going to go ahead and stop here. This is the end of day 7 of Kouri Richins. The forensic accountant came on board and told us a crap ton of all of the shenanigans that Kouri Richins was involved in, somewhat of what Eric Richins knew and what he didn't know. And, ultimately, Miss Nestor asked if she unalived him for his money. She can't answer that. But we do know that she did take the money and she paid off some loans. Make of it what you will. All right, so we are going to gear up for day 8. I think they're starting a little bit late today, but that's okay. Make sure to like and subscribe if you want to hear more. I'm trying to bring this to you and make you aware of things not to do in your life. So thanks for watching. Again, rest in peace, Eric Richins. We hope that you get the justice that you deserve one way or the other. And Richins family, I am very, very sorry for your loss. This is a very heartbreaking trial to go through. And I just, I feel for you. But just remember, Kouri Richins is alleged to have done this. And until the jury comes in with a verdict, keep our open minds. We can talk about it. We can surmise. We can suspect. We can speculate. But until the jury comes back, she is innocent until proven guilty. So we'll see you in a bit. Thanks for watching. Thanks for watching Legalese 1, 2, 3. If you like what you saw, please like and subscribe for more content.